Welcome to Power Charting. I'm Bruce Frazier, your host, and today we are going to do a little work on sector analysis so that we can get kind of a three-dimensional sense for how the markets are weaving together at this time. It's a very interesting picture, and we want to see how the separate sectors are all interacting with each other and interacting with the market, and sort of separate ourselves a little bit from the one-dimensional index-oriented analysis, which is very valuable, but also doesn't tell the whole story. So let's get started here and have a discussion about sectors. Let's begin by having a discussion about indexes, and let's have a look at the S&P 500. We're going to remove the trend lines, just a look at this market, which we can see the S&P has really been range bound since the beginning of 2018 after a really dynamic uptrend with a climactic surge into the end of 2017 into early 2018, and this has produced a condition where the market really is just trading sideways. And the thing you can see here is that in fact it's becoming more volatile. Big drop from October into a shakeout low at the end of the year, and then a straight up advance into the beginning of the new year 2019 into the period that we're in right now. So let's do this. Let's put the trend lines back on, and here you can see that there's two adjacent points that we've drawn a trend line at, which is quite interesting at the current moment. And then we have an overbought line, which is a parallel. Here it becomes overbought, and then it becomes extremely overbought at the buying climax, produces weakness, which is an automatic reaction. So we have resistance and support, and then an upthrust. And this upthrust fails and produces a very sharp shakeout into the end of the year and a rally. Well, look where we are. We've had this return back up to the top of the range-bound resistance area, where we have recently reversed back into just the top of the resistance area. We're right below it. And this is an interesting juncture that might actually be a little bit vulnerable. And we're back below the buying climax resistance, and we're just hovering there. And so let's have a look at, well, the other thing I want to point out is this demand line right here. Notice how it rode along the demand line, the S&P 500, and then just suddenly failed below that demand line. It's out of the channel, and it also failed the resistance line. So let's keep that in mind as we move forward. Here's the Nasdaq Composite, and let's just, for fun, take off the trend lines. And you can see here that the trend has been pretty persistent, and then all of a sudden a bout of weakness came in beginning in May. If you go back a couple episodes, you can see some intraday point and figure work and vertical bar chart work, which shows this classic distribution area right up here at the top. Okay, so now let's put the trend lines back on. We've drawn a demand line underneath the market, traditional use, and an overbought line here. And you can see we became slightly overbought above the channel here and failed right out of the channel. And now there's been an attempt to rally up underneath, but notice that the rally underneath has been rejected, and now it's turned back down. So it's in somewhat of a vulnerable place because it's no longer in the channel. And then moving on. So let's look at energy first. And you can see that energy is kind of a big trading range type environment with extreme weakness into the end of the year. And I want to show you primarily the relative strength. The relative strength here has been very weak all the way through. Look at this. It's really sort of been a theme all the way down. And so continues to be below the downtrending long-term moving average and remains in a downward condition. We've had a rally, pretty good rally up to the downtrending moving average, and where it's been rejected, and this has been with pretty strong crude oil prices. So the stocks themselves are not acting as well as crude oil. And the thing that probably will illuminate this situation for us a little bit is to look at the point figure. And so let's do that. And now notice this. This is something that I think is encouraging. And that is, this is looking a lot like accumulation. And even though the relative strength has been quite poor, there is accumulation potential building here. But what we're going to need is we're going to need to see that relative strength start to strengthen against the market and act better. And this point figure start to walk uphill and climb out of this area, which is defined by this resistance here. But this, if it does do that, this is very encouraging. But what we will do in the meantime is let's just take some counts. We have a count here, we have a count here, and the count that we have for the XLE 13 columns, well, this is 17 columns, counts down, goes from the area of $77 and goes down to 60. And so you can see here's 60, and then there's a lower count at 57. This takes us right into this climactic surge downward, which suggests that we have used up all the distributional fuel in the tank for a decline. This has produced a rally. Now we have an accumulation that's taking place here potentially. We have to turn the relative strength, but if we can do that, that could really produce a favorable condition for the energy in the future. So we'll just keep a very close eye on that. Here we have healthcare. And let's take the trend lines off and just look at it. You can see that it's been a very good upward trend or rising theme in healthcare throughout. And this in and of itself looks very bullish, constructive, higher highs here and here. But look what's happening. Look at the relative strength. The relative strength is started to turn down in November. And this is before the market. So all of a sudden, the relative strength in healthcare was persistently declining ahead of the market and was worse than the market into the end of the year. Then notice there was a rally here, and this rally was to a lower high, and then weakness prevailed or started to come in healthcare ahead of the market. And look at the persistency of the negative relative strength that's taking place here. All of a sudden there's a change of tone in healthcare, and healthcare now is firmly below its long-term moving average on relative strength, and it's attempting to rally here, but it's rallying from a very low level, and if it can get up to this moving average, it's likely to show some more weakness. And so we're looking at this and saying this may be an area to avoid for the moment. So let's have a look at those trend lines. And you can see here that these trend lines are, here's traditional use of trend lines, and we literally drew them on 2 points, here and here. And then we drew the overbought line on this point. Look at that small area and look at how well it worked. Attempts to go above the channel, climaxes, comes back in, climaxes again, up thrust this area here, which we can draw. And you can see that there's attempts to get above it, but can't stay above it. Now notice what's happening. Weakness underneath the demand line, weakness again underneath the demand line, and now attempting to rally, but it's staying underneath the channel, which is a source of vulnerability. And so this is very concerning for healthcare, and we're going to want to watch to see if healthcare goes into a just an outright downtrend. And so we'll keep a very close eye on that. The thing with healthcare is that we have a distributional account that's across here. Let's draw these. We have a count here, and we have a count across here. This count is 16, counts across 16 and takes us to $79 to $75, which is here and down here. And then this count takes us to an area of 83 to 80. And so that's here and here. So we have two counts. Now, what we would worry about is that if we combine these counts, which would give us a much bigger decline, but at this time we're going to just segment them and look at them separately with the idea that the count could grow larger. Let's see if this can go down and break this low right here. And so we'll move on. And this is industrials. And just for fun, let's take off the trend lines and just look at this the way it is. You can see that just from the look of the XLRE, you can see that this has been a little weaker than the market. Notice the downward trend of relative strength here in 2018. It's been a laggard, and then it was very weak, and the relative strength was weak on this decline into the end of the year. The rally has been pretty good, but it's really been sort of a market level rally where this relative strength line has been sideways. But there is something to be encouraged about with the industrials. Look at how it's now back above its long-term moving average. And if it can stop right about this area here and start to turn up again, this could put the industrials into a situation where they could climb out of their range-bound condition and start to lead. And so this has some encouraging characteristics to it. And so if we put the trend lines on here, the only thing that's a little worrisome, we have a reverse use of trend line here, these 2 points, here's the oversold line, parallel, and now we've rallied up to this underside of this oversold line, and we've turned back down off of it, which has also produced a little bit of relative weakness. And so it would be good for the industrials to hold around this long-term moving average and start to move up and jump up and out of this range-bound condition, and that would be an excellent outcome. So we'll watch that closely for some improvement. And so here with the XLI, there's 14 points of accumulation, and we can see that that's across the 68 line. Let me draw this for you. So here, and this count gives us a potential of upward of 82 and 74, which is kind of a wide area, but it's possible that that count could grow larger. And so there's a little bit higher to go, 75 to 82 potentially here, but there could be a larger count out there if we can get the industrials up and out of its range-bound condition. And then let's go on here and look at the financials, which I think are very interesting. And so let's take off the trend lines, and you can see here that financials were phenomenally good in 2016, 17, climaxed into 18, have been going sideways. Look at the downward tilt of the range-bound condition, the sideways action that you can see here, and the relative strength, as you can tell, is downward. And so you can see that. And so there's been a negative tone to the financials. But notice that we're just knocking on the door of getting above this moving average. And notice that since March, the financials have actually been in a rising trend. And if they can continue to do that, this could change the picture pretty quickly for financials. And so let's hope that what happens, and I do like to hope for groups that I think are important for them to go up. And you can see here that there's been an accumulation area. It's jumped up, it's backed up. And so now if we can start to get it to rise, we could have a better tone from the financials. And so let's see if we can get that. Let's put the trend lines back on here, and you can see that the stride here was set back in early 2016. It's gone up and has attempted to stay with the trend line, but look at here, it was vulnerable, it was underneath. This is a condition that exists now for some of these groups. So this can be important, and an important vulnerability for groups in an uptrend is when they fall out of their trend channel, and then a big failure which produced relative weakness, which means that the financials were weaker than the market here. But now all of a sudden they're trying to be a market performer, and in the last little bit they've been stronger. So let's keep an eye on financials, because if financials, I think, are very good underpinning for the market, and we can hope for good conditions there, which I believe would be very good for the market as a whole. Okay, so here we can see with the financials that there's 13 columns across. Now look, this is actually very encouraging, because look at how large this area is. And so if we count 13 from 22, we get up to $35, which would be a heck of a move for the financials, jumping up and out of this potential accumulation area. And then $26 from the count line across here, which would give us 39. And so there is cause for higher prices, but the key is jumping up and out, which is very important. Okay, materials. So materials jumps above on a climactic surge at the beginning of 2018, and from then on, materials has been really a distinct underperformer. You can see here, look at the decline, the relative strength decline, big downtrend. We have no reason to think that this downtrend isn't just going to remain in force. It's down here at these lows of 2016, so possibly we can get some kind of an oversold bounce here. But until we can get the relative strength above its downtrending long-term moving average, and then show an ability to start making higher lows, I would only be watching materials and keeping an eye on them. And this suggests that the inflation pressures are not yet in place, and maybe we have deflationary pressures. And look at this downtrending line here across this peak and this peak and so on. So let's keep an eye on this and see whether or not it can start to change its tone and become a market outperformer. But for the time being, we have to believe that materials are going to continue to be a source of weakness. And we can see here that we have a distribution count, which is 9 across. It's right here. Let me draw this so that we're real clear about this. So we have a count here, and this count goes down from 60, and it counts down to 51 right here, and it counts down to 48. And so we have 2 counts for distribution. Look, it hit it nicely, and then it started to rally, And so we have an accumulation count across the 47 line. We can count across, and we get a count of 11. And this count gives us a count up to 58, which we've hit. So we have a trading count to 58. We are now at it. And there's also another count that can go to 63 across here. And so this does have the potential for higher prices. We'll see if that happens. We've hit the minimal count here. All right, so now we're getting into some of what I believe are the most interesting sectors. The other ones, have been, they have some elements to them that are potentially positive, but here, these are the sectors that I think are really leading the way in the market right now. And so here you can see this is the consumer staples, and look at the downtrend that has been in force with consumer staples since early 2016. Really a laggard in a decline, in a really good bull market run. Well, look at the overthrow of this trend channel down here. Just draw this. And so you can see the oversold condition here, and look at how that produced a change of character into an uptrend. This is very encouraging. And notice that into the January, February 2018 low, the extreme weakness that also coincided with this oversold condition, tremendous amount of weakness in the staples, went under its uptrending channel, but that was it. That was exhaustion, which occurred both in price and relative strength. And then this was the big tip off, is look at how well this rally occurred into the end of 2018. And then there was this big bout of weakness. But after that, there was another really good rally phase. And this rally phase, which was generally constructive, look what's happened. The moving average is rising. Relative strength is above its moving average. That's also the case with price. Price is above its rising moving average. This is an in-gear industry group or sector. And look at how well the staples rallied in the first quarter. This was really just a terrific rally. Now, the thing that's happened since is that we are slightly above this resistance line right here. So this is going to be interesting to see whether we can hold this. It'd be great if it would just pause. I believe that because this trend is up on relative strength and on price, that we can expect the continuation of a good trading market in staples. It may have to pause along here, but then I would expect it to keep going up and continue to be leadership. So this is very encouraging. And let's have a look at the point and figure chart. And this is real estate. I need to go to this chart. Okay, so you can see here this great run up and out in the point and figure. And the thing that we're going to do is we're going to take the count, which is accumulation count, which is 16 columns across here. And we're going to actually take from this place where weakness occurred, we're going to count from here over to here. And then this will give us a count of 16 plus 48, which takes us to 64. And so our objective is up here in the $64 area, which is higher than where we are now. And then also we have a count that we could take at the midpoint, which is a little bit higher. I think it's around 67 up here. But the point being that there are still higher prices ahead for consumer staples, and it is jumping up and out. May need to pause a little bit here before it continues, but this looks very constructive. Okay, Now we're getting into real estate. This is another really interesting place that we want to see this chart right here. Okay, so here is a terrific chart. Look at the relative underperformance of real estate going back in the mid 2016. It's a laggard throughout the entire bull run. And then it starts to make higher lows here in 2018 as the market becomes range bound. All of a sudden real estate wants to be a leader, and look at the higher lows. Eventually it gets above its moving average, comes back down to test one more time, and now it is full on leadership in the market. Look at this beautiful jump up and out. This is a up thrust and then a backup, another up thrust, another backup, and then as 2019 begins, it just starts to rally in a leadership type situation. It looks really, really good. And so we would expect rising moving average, rising prices for this to continue. The only thing that's a little bit of a concern at this point is just the fact that it's a rising trend channel. And so this is a place where it may need to pause, or it may need to even come back towards the demand line of its channel. It may do it in a long-term way like this, or it may come quickly, but it's possible that this overbought condition needs to be resolved with some kind of a pause and a backing up type action. So we will be prepared for that. Okay. There we go. And then finally, we want to look at technology. Technology is really an interesting theme. Okay, so you can see here with technology, we have a long-term trend line. Now, notice this trend line is made on 2 points back here in early 2016. Then there's an overbought line that's parallel that's drawn on this point right here, and you can see overbought, touches here, overbought, comes back in, and then hugs the overbought line until the weakness of the fourth quarter of 2018, and then an outright failure down and out. And this was a really steep decline, and you can see that the relative strength broke its long-term uptrending moving average. So this is really an important setup, but I am out of time, so I want you to study this. You can see it's overbought here, and now it's attempting to come back below the channel. And thank you for your time, and I hope that you found this useful and interesting. And go back to January, and you can see that there's also some great sector analysis on at the beginning of the year, which I think was quite good. So have a look at that also. See you next week.